Hey fellow investors and fellow stock guardians, it's Tuesday, February 16, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a mixed stock market. The stock market indices didn't do too well on Tuesday. The Nasdaq and the S&P 500 finished the day in the red, while the Dow ended Tuesday above zero, but only barely. As is customary these days, the stock market crash warnings were widespread across the media, especially after the market indices hit new record high levels last week. Moreover, there's a new warning sign coming from the bond market. The 10-year Treasury yield hit 1.3% on Monday. This is the rate banks and credit providers use to price their loans and credits. It's quite higher than what it was during 2020 and makes investors worried about possible lower economic activities such as lower new mortgage applications and slower money flow into equities. Those are some of the key reasons we saw negative or barely moving indices today. Shares of cruise line operators were shining green on top of the winners list today. Royal Caribbean Group shares were up more than 10%. Carnival shares were up also more than 10% today. The news surrounding these cruise line operators are quite grim, as major cruise line operators have already postponed the reopening until a later date in 2021, and debt is ballooning across the board. Moreover, financial analysts are downgrading them one after another. However, the vaccination is well on its way and hope is rising among investors. On Friday, in a letter to its employees, Royal Caribbean confirmed that vaccination of the crew is a part of the company's plan to return to normal as soon as possible, and that's probably the fuel behind today's stock movement. This is an example of the forward-looking nature of the stock market that tends to forget the current status and focuses on what the future could look like. Yesterday, during the long weekend stock market recap, I introduced you to a company from China that was one of the best performing stocks in 2021 so far. Today, the same stock was the biggest loser in the market, down by more than 60% in its value. The company is a drone and air taxi manufacturer who gained more than 470% since the start of 2021. It seems the company has become the target of short sellers from Wolfpack Research, calling EHang an elaborate stock promotion. That's the quote. That has lied about its products, manufacturing, and revenue and partnerships. Oh my. As we discussed before, short sellers are necessary functions in a healthy market that provide a counter argument to our investment plan. If you remember, we had exact same situation with another Chinese recent startup that had planned to overthrow Starbucks. In short sellers and reports of fraud came out, and that company is not on top of the list of any of the investors anymore. Well, while EHang operates in a growing market of air mobility and taxi that is expected to grow to more than $8 billion in the next few years, as an unprofitable, somewhat new IPO, investing in these stocks comes with quite a lot of risk, and this short seller report is one of such risks. I have these stocks on my watch list to investigate further. I don't recommend taking any action until we better understand what's going on with this company's operations. Putting EHang aside, the drone market is definitely worth our attention. Type in drone in the search bar on a StockCard's Discover page and get a list of drone stocks to start your research in this market if the EHang story has piqued your interest a little bit about this market. By the way, the cold winter weather has pushed the oil price up, especially because several Texas oil pumps are forced to halt operations due to winter storms. West Texas intermediate crude oil price is now at the highest since January 2020. Do you remember when the oil price tanked so much that you could have been paid money if you ordered an oil barrel? Back when that happened, did you think the oil prices ever recovered to this high level? If you have some time, think about your reaction to the oil price drop back then. What can you learn about yourself and your investment psychology, knowing that what once seemed a disaster has recovered nicely in less than a year? My takeaway is that things are rarely as bad as they appear in the stock market, especially if we are in the midst of a crisis like what we were a year ago this time. That's it for today. As always, if you like to give a Stock Card VIP a try to research as many stocks that you want and follow successful investors' portfolios, use promo code ROLLWITHOURCEO, all lowercase and in one word. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.